Welcome back. Well, let's focus on one of the blockbuster numbers that we got overnight. And looking at the stock price in the final hour of trade yesterday, the street didn't sense that because the stock actually ended at the day's low. The intraday chart will tell you the picture. But Dixon Technologies, they reported a solid set of numbers in the second quarter. Revenue beat, margins, net profit were more or less in line. To understand what's the way ahead from here on, we are joined by Mr. Atul Lall, the MD of the company. Hi, Mr. Lall. Good morning. Congratulations on a solid showing. Well, your mobiles business clearly is driving the way and volumes have perked up out there. So what's the volume target you have for the mobiles division? And you're also focusing on the value-added segment, which will help margins in turn. So what is the percentage contribution over there? So tell us that number and also give us a sense about TV, because out there the volumes declined by 10%. Please go ahead.
Thank you so much. It's been a good set of numbers, and undoubtedly the biggest trigger of our growth is the mobile segment. We have pursued mobile segment very vigorously because in electronic manufacturing sector, the addressable market of mobile is the largest contributor in the Indian economy. So we pursued it vigorously and now it's showing results. We have grown significantly and now we are touching a volume of almost 2.7, 2.8 million. All the brands which operate in the Android ecosystem are our customers. We are working on acquisition of one more large brand. Hopefully it will fructify in a couple of quarters. Another large brand, the production is about to start in the month of November. Also, our acquisition of iSmartU has played out. It has been consolidated and those numbers are also getting reflected. So we feel that in a couple of quarters, we should be somewhere around 3.5 million phones per month. And that's a large portion, that's almost 35, 40 million. And out of outsourcing opportunity of 90 to 100 million, we will be almost at 40% share. That's a very large share of the whole pie. We are further deepening the value addition. So in the non-semiconductor component sector, we are making significant investments. Our focus is that the present value addition of 17 to 18% in the next 2 to 3 years should be taken up to 35%. So first, we have already signed a JV term sheet with one of the largest display manufacturers in the world. We are going to set up a capacity of almost 24 million mobile phone displays, another 12 million notebook displays in the next 12 months in Noida. This will contribute almost 8 to 9% of the bill of material, so deepening the value addition. So further, we're working our potential partnerships on camera modules, mechanicals, precision components, and die cuts, which will take the value.
Mr. Lall, if I can, Mr. Lall, hi, good morning. Prashant Nair, and congratulations. Lots of details here, and we'll get into more details, but I just want one headline number out of you, and then we'll go back to individual segments. So H1 revenues, Mr. Lall, are 18,000 crores plus, 18,100 crores. Your guidance to us for the full year was between 30 and 32,000 crores in revenues. I mean, this looks like it's going to be, much better than it's going to be, what, 36, 37,000 crores more for the full year?
Yeah, we are fairly confident that it's going to be much better than the earlier number that we had predicted for ourselves. It's going to be significantly higher than that.
So, close to 40,000 crores in revenues for FY25?
Prashant, I don't give guidance, but it's going to be significantly higher and somewhere close to the number that you're just mentioning, yeah.
Okay, and margins for the, what about margins? Your guidance was between 3.9 to 4.2%. The first half margins are 3.7. What should we expect here?
We feel the margins are going to be in the range of around 3.7, 3.8 because the sales mix has changed. And the large contributor now is mobile, which is relatively a low margin business.
Mr. Lall, I was just coming to that to get an idea of whether there can be any sort of pull-through in the mobile margins. That's your largest segment, like you're saying, right? So, and you're talking about more value-added inputs there on that business. So you're at 3.3% margin, I think, around in the mobile business. will it keep hovering in this range, or is there any potential, as you're looking at some more value addition, is there any more potential to pull up the mobile segment margin?
So once our backward integration projects are executed, there would be a definitely improvement in the margin profile of mobile business. That's what I was sharing, that once we start manufacturing displays, once we start manufacturing camera modules and the mechanicals for mobile phones, they're all margin accretive businesses. So
exactly. So that's what, that's what I was trying to understand, that since you mentioned all those initiatives, what is the potential increase in the mobile business margin, say a year, and some timeline, a year down the line, 2 years down the line? Where do you want to take that mobile business margin? Because that'll be a huge kicker for the overall company margin, right? That's your largest segment.
So we feel that we should be able to take it to around 4.5% once all these projects, half years, are
By
executed. When? Another 18 to 24 months.
4.5%.
Okay.
All right. Just one more quick question on the components for the data center server component planning. What's the update out there? And also, you're looking at manufacturing modules for the EV sector. So give us an update on both these two parameters, because that has another big runway for you.
So our next foray is into the IT product. We're setting up a new campus in Chennai. We have already acquired 4 of the largest brands in India as our customers. The manufacturing is going to start in the Chennai campus, hopefully by Q4 of the current fiscal. And then the foray is going to be into the server segment. And for that, we are working on certain partnerships. Hopefully, very shortly, we're going to make some announcements on that front. As far as our other EMS activity and the EV segment is concerned, it's in a stages of infancy. I'll not be able to give more details on it. That's a slightly long-term plan. At present, the execution is on the IT product and then our foray into servers.
So in the 40,000 crores revenue that you mentioned, is that taking into account some revenues that starts to come in from the laptop and IT product segment?
No. We have not.
That'll be next year. It'll be in FY 26. Okay.
That's right.
Right.
That's right.
Okay.
Right. Mr. Lall, could it be close to this year? I'm sorry to push. Could it be close to 44,000 crores?
No.
Or closer to 40?
Somewhere around that, I think. Somewhere around that.
Okay. Got that. And what, I mean, amazing, right? We only I think FY 24 numbers were close to 17,000 crores plus. And you'll be at 40 plus maybe this year. So just an incredible rate of growth. We leave it there. Mr. Lall, appreciate you joining in, and thank you very much for being here on CNBC TV18. That's Dixon for you. 15,000 rupees on the stock price, and that's going to be a star this morning. It's a significant beat as such. We'll take a quick